The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Make the call 800-306-1990, 800-306-1990. And yes, I'm going to tell you about it. So if I can get my board here to work properly, it's not being very cooperative with me this morning. So rsrmarketminute.com, rsrmarketminute.com. If you have an interest in getting our report first thing every morning, we try and get it out early. What's going on in the mortgage world? We're constantly updating that. Every day we put that out, rsrmarketminute.com. And of course, it's free to you. But every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. OBMMI includes a lot of pricing data, but they do not tell us APR. They do not tell us points paid. They do not tell us points received. They're just giving us the locked rate yesterday, 30-year conforming loans, 6.97, down a little bit. 30-year jumbo loans, 7.142. That was down a bit. 30-year FHA loans, 6.848. That was up a bit. 30-year USDA loans, generally for the rural areas, no down payment, 6.891. And the best loan on the market, that would be the 30-year VA loan, 6.687, down just a little bit. And we like seeing those down whenever, well, I like them down as much as possible just because I am a fan of our veterans, love whatever we can do to help the veterans. And that, again, is the best loan on the market. Now, what we want to do today, though, is take a look at what's going on now, because now that we've gotten into what, is going on yesterday, let's take a look and see. We've got the 10-year Treasury down 7 basis points, 4.02. The S&P 500 is down 50 points. The mortgage-backed securities are up 6. Why? Well, I told you a little earlier it had to do with lawyers. Yeah, the lawyers are out there, and that's who's running the Federal Reserve. Got a few economists. Maybe they can. Here's the issue. The lawyers look backwards. The economists, their job is to examine what's going on today, look at history, and try and forecast the future. Well, that's not quite the same as what the lawyers do. So stocks lower, giving back most of yesterday's gains. Mortgage bonds moving higher on comments from Philly Fed President Patrick Harker and lower inflation expectations from the ECB. Philly Fed President Patrick Harker spoke this morning and suggested that the Fed could now be patient and not hike in September. He doesn't expect rate cuts anytime soon and thinks the Fed should hold at the current Fed funds rate for quite some time. He also believes the U.S. will avoid a recession. Yeah, right. And I've got some beachfront property
know better than that.
in Corona. Yeah, you know better than that. Harker's comments were in direct contrast to Fed Governor Michelle Bowman, who wants more rate hikes. The difference is Bowman was a lawyer with no financial or economic background, while Harker is a PhD economist. Big difference. Have you ever gone to a doctor and asked them for business advice? Just throw that out there. Also helping bonds were lower inflation expectations from the European Central Bank. They now expect 12-month inflation to be at 3.4%, down from 3.9%, and 3-year inflation expectations to be at 2.3%, down from 2.5%. NFIB, that's the Small Business Optimism Index for July, rose to 91.9 from 91.9 from 91, matches the best levels since September. Plans to hire rose 2 points, while the number of job openings was unchanged. Of importance was 92% of businesses that are hiring reported few or no qualified applicants for the positions they were trying to fill. This can explain why we're not seeing initial jobless claims rise. While we saw the improvement in optimism from small businesses, the NFIB used the word dismal and said with small business owners' views about future sales growth and business conditions dismal, Owners want to hire and make money now from solid consumer spending. Inflation has eased slightly on Main Street, but difficulty in hiring remains a top business concern. Moody's just cut the credit rating on a bunch of regional banks. They cited that a lot of pressure is mounting, including assets getting devalued because of raising rates and loans that they hold in the commercial real estate space, which are coming under pressure and being devalued. This will likely cause more of a credit crunch. We're watching all of these things for you. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call, 800-306-1990, 800-306-1990.